So let's just go over to gold now. If we have a look at gold, gold's pulled back. It's just come back to the lower end of the trend channel. This trend channel has been supportive going back to end of December this year, or end of December 2015, beginning of the year over January and February. Revisited that low in May when we had the worst non-farm payrolls in 6 years. Big breakout to the upside, and we've just come back for a retest, the lower end of the trend channel, retested the 1360 zone, 16 zone, so 1,316 US dollars per ounce, and we're still moving into the pennant. You can see here probably on lower time frames you've got some sort of rejection candle forming. Yeah, there you go. See, yep, you can see. Let's put it on the 1 hour. Yeah, 1 hour. We're finding support definitely at this pivot at the moment, lower end of the trend channel. Gold's getting bid back up, back into 1320. There you go. Hammer on the 4 hour chart. Clear trend channels developing. I would definitely watch out for gold here. It's not really breaking down as much as you would expect given the data that's come out of the US today, holding on to key support channel. Also, the more that we're squeezed into the end of this pennant, we should get a resolution soon. There's a lot of underlying support on gold at the 1300 zone. If we can get a breakout now, it's getting tighter and tighter. So I would look now for a breakout around the 1335 zone if we were to fully break out from this pennant formation. Watching the metals closely, you might argue at the moment that we've got lower highs at the moment, which we are developing at the moment on gold, but we're also in the short term, we are developing higher lows as well. The 100-day moving average has been very supportive. We are kind of channeling sideways. I would say this is a sideways moving market right now, but gold is still up 23% so far in this year. The overall trend on the larger time frames is still on the bullish side with gold. It's entered into a bull market this year. The overall trend does favor breakouts to the upside when you have these pennant formations. I'll give you an example on sugar, case in point here. So sugar, which developed into a very tight pennant formation recently, strong underlying support. When it finally broke above its resistance, and I'll show you the pennant which developed on sugar recently. So we continued to see this market really get tight. It continued to consolidate for over 2 months. We developed into the pennant here, quite a strong move into the pennant. A lot of retest of the 50-day moving average. When it finally broke out to the upside, it's now moved 20% over the month of September. Sugar has moved 20% since it broke out of that pennant. But prior to that, over July, August, hardly did anything, just stayed range bound for ages. And this is what I would say is happening on gold, silver at the moment, is they're stuck within this range. Once they get going, and ideally I would like to see a breakout to the upside within the predominant trend at the moment. I think that's where you're on the same side of a lot of the managed money position at the moment. And if we were to see a breakout to the upside, I think that could really push gold and silver significantly higher. We might not get it, but if we do, I'll just put a few different commodities on your radar. And sugar is one of those, which is now up 46% this year. This is the runaway move we've had over the last 2 weeks, 20% move. We identified this trade setup with you all actually on a previous session. Number of times actually we talked about sugar, and that's been one of our best trades this year because we've still continued to hold positions as well, going all the way back to April here, which we've seen significant gains on.